Hello and welcome back to another episode of RE Radar. Once again, I am your host and realtor, Nathan Matheson. And as always, RE Radar is your go-to source for the latest insights and updates in the real estate world. Today, how I'm going to be updating you guys and giving you some real estate insights is by going into a deep dive of the Seattle housing market's performance this past January 2025. So whether you're a buyer, a seller, or just curious about the market trends, I've got you covered on this episode. So let's hop right into it. Now, as we step into 2025, Seattle's housing market is showing some promising signs of recovery. After experiencing fluctuations in recent years following the COVID boom, January has ushered in kind of a renewed sense of activity and optimism. Buyer demand is on the rise, inventory levels are a little more manageable, and homes are moving off the market faster than before. This resurgence aligns with the natural rhythm of the 10-year housing cycle, indicating potential opportunities for those who are ready to engage in this market. Now, how do you really do a market dive for January? And how do you do any type of market dive? You've got to look at the numbers. So using the MLS, the multiple listing service here in the Northwest, I've got pulled up a few stats. And if you are watching this episode on YouTube, then you'll also be able to see these stats on the screen. And if you're listening on one of the podcast platforms like Spotify, you'll simply be able to hear me detail these. So without further ado, let's just jump right in and look at the median price in Seattle for sales. And what I'm doing here is I'm looking at purely residential and condominium sales in Seattle. So what we find here is that median sale number was 775,000, which is up 2.6% from January 2024. And a piece of data that I think is really key and can really show that the real estate market is really heading in that correct direction is the new listing data. This past January, there were 1,080 new residential and condo listings. And you compare that to 2024, where that number was 740, and you see it's a good bump up. But that's really just the end of the haystack here with that, as that number, 1,080 new residential and condominium listings in Seattle, is actually the most new listings we've seen in Seattle in a January since 2011. Doing some quick math there, that was 14 years ago. So that is quite noteworthy, I think, and is really an emphasis on the idea that we are moving in the correct direction. New listings are showing up. I mean, more people put their home on the market in January than they had in recent years. That's apparent with that stat right there, and that's apparent with showcasing the idea that people are ready. They're ready to sell and people are ready to buy now. So what does this actually mean for buyers and sellers? Well, for sellers, this climate is still advantageous for you guys. With approximately 44.2% of homes selling within the first month on the market, it's a great opportunity for you to list your property. And with the combination of increased buyer activity and limited inventory, because while I say there's been a huge push of inventory in January, the total levels of inventory are still below what the average had been before COVID hit. So inventory is much stronger than it had been last year and even the year before. It's still not at the traditional levels. So we're getting there, but it's still not there. And that is still going to give that advantage to the sellers in having a limited inventory. For buyers, really what gets the most talk about is the interest rates and the interest rates being high and all this. So, well, yes, interest rates are still in the, I guess, uncomfortable zone for the average person out there right now. They have steadied enough to kind of encourage that re-entry into the market. And I think people have kind of, I don't know how to put this exactly, but they understand more, I guess, that interest rates are never going to get down to 2-point-something% again. They're just not going to get down to that unless something crazy happens that would be bad, that's for sure. So interest rates aren't going to get to that ultra low COVID levels. And where they're sitting right now is in that high 6%, low 7% range. And quite frankly, that's where they're going to be for a little while now. They might get down into the high 5% by 2026, but that's a little ways out, and it's going to be a slow process with that. And it's likely going to be where interest rates sit for the next half decade, potentially in that 5 to 7% range, sometimes more, sometimes a little less. Now, what I've seen personally out there working, and especially during open houses I've hosted, I am seeing more and more buyers starting the process of looking for the home. And that really kind of backs up on the idea that people understand this is what interest rates are going to be. We need to buy a home, whether that's a new job, whether you're starting to try to plan for a family, whatever the reason may be. People need to move, people need to buy homes. Owning a home is still the best way to build wealth, as I've talked about before, with average net worth of renters having like around 11,000 and homeowners being over 400,000 average net worth. So home ownership is still something people want. And people are now starting to realize interest rates aren't going to be super, super low anymore. Let's get out there. Let's start looking at some homes and let's buy one. Now, looking directly at interest rates, January 2025, the average rate of the 30-year fixed mortgage hovered right around 6.99%. So at 6.99%, yes, they are way higher than the 2.9 or whatever percent they got down to during COVID. 6.99% is by no means historically high if you look at the whole history of interest rates. I mean, they've spent years and years in the 10+% range, 15% interest rates. So 6.99%, if you look at it big picture, isn't really that bad. And what we're really looking at and seeing forecast is kind of a steadying of rates. And that's going to make a more predictable environment for people to be able to plan these home purchases, talk with financial advisors, and figure out when is best for you to get your foot in the market. It's likely going to be sooner rather than later because, as I harp on often on this episode, home prices are going up. Home prices in Seattle are going up. As you saw, even during this somewhat kind of poor year in real estate, the January real estate residential condominium market still went up almost 3%. So rates, in my opinion, if you're looking at them as the motivating factor, they could go down a little bit in 2025, but they're going to stay in that 6 to 7% range, it appears. And really, it's so hard to predict interest rates, and you can't really guarantee anything on them. But one thing that I can pretty much guarantee for you is that home prices are going to increase. The price of that same home in 2025 is going to be much higher in 2026. So if you were waiting, thinking, all right, let's just wait, let's hope interest rates get to the low 6% by the end of the year, then we can buy this home that we like. Well, that home that you like is probably not going to be in the market anymore. And that home that you like is going to be more expensive than it had been if you bought with the higher interest rates. Wait for rates to drop a little bit, and then you can always refinance. Now, inventory levels really play a crucial role in the market dynamics. For Seattle, there's about 2 months of inventory, which that is considered low, and this limited supply is what is going to contribute to the upward pressure on home prices and underscores that importance of the timely decision maker for buyers. When you see a home that you like, sometimes you can't wait on it because with low inventory, you might not get a home like that coming up onto the market again. So you have to be ready. You have to be prepared. That's a key point in real estate as a buyer or as a seller. You have to always be prepared. And for sellers, even with the spike in January's listing inventory, it is still that seller's market with low months inventory, meaning there is less competition and a higher likelihood of you attracting motivated buyers to your property, especially if you have a property that is in a desirable area, that is well maintained. You're going to get a lot of interest on that house. Now, looking beyond Seattle, the broader King County area, it also reflects all these positive trends with median home sold price in King County at $790,000 in 2025, up 3.2% overall from last year. So the broad King County region is also experiencing somewhat of a revitalization, somewhat of getting out of the COVID slump and trying to get back into that more traditional Seattle and King County real estate market that we saw pre-2020. Now, as we progress through 2025, there are several factors that are going to influence this housing market's trajectory. You've got economic conditions, employment rates, potential changes in interest rates. All these are going to play a pivotal role. However, with this current momentum here in January and coming into February, it suggests a positive trend, and both buyers and sellers should stay informed, remain flexible, and be prepared to adapt to the evolving market conditions. Now, that wraps up today's market update on RE Radar. The Seattle housing market is showing those encouraging signs as we kick off 2025. So, whether you're considering buying, selling, or you're simply looking to stay informed, understanding those trends is crucial. So, thank you for tuning in. And if you have any questions or topics that you'd like us to cover in future episodes, feel free to reach out. Until next time, stay informed and make those smart real estate decisions. Thank you for listening and thank you for watching.